Well, good morning and welcome to the Naples Money Managers News You Can Use. It is a gorgeous morning out there. It was 58 or something when I left for work. I was in seventh heaven, but I'm dressed for winter here. Marcus Bickle is going to join us this morning. He's also our camera runner.
Hello, everyone.
I hope your head's in this one.
I think so.
Okay, otherwise you're going to have to sit on the floor so that we can be the same height. It's unbelievable. We're going to talk a little bit about interest rates today and a little bit about maybe Amazon. As usual, I try to give everybody a little update on what's going on at the office. To remind everyone, our hours did change. We are now closed at 4:30 Monday through Thursday and at 4 o'clock on Friday. This is helping all of our staff handle all the COVID issues and kid issues that we're dealing with these days.
It's childcare.
Oh, right? I don't even know how you guys do it. Also, remember the 1099s. You'll get them when we get them. If for some reason you don't get them by tax filing day, please let us know. We'll try and see if we can track them down. But generally, they mail them to you about the same time we get them. And tax strategies, think about that for going forward in the year. We talked about Roth conversions, charitable remainder trusts, and donations. It might be a good year for it. We don't really know yet because we're not sure what the new tax laws are going to be.
Right, all that's kind of pending.
Kind of pending, but you can start thinking about that stuff. I mean, we don't like it when you come and do it at, like December 15th.
Last minute.
No, not so good. Remember to make your IRA contributions as well, or Roth contributions if you have any to make. So that's kind of just a little housekeeping. I want to keep reminding people since it's tax time. And
Sure, absolutely.
Yeah, and remember if you sold a house or a business or bought something, let your tax people know, especially if you've done it for this year. Let them know as soon as you can, so that if there's tax planning to be done, we can get it done.
Yeah, actual planning.
Yeah, planning. There you go. That's a thought. Okay, so what do you want to start with? You want to start with the interest rate markets, or do you want to start with?
Well, I think it kind of all plays together.
Okay.
So we've seen a lot of volatility recently, the last couple of weeks with interest rates. We've seen an increase in the 5 and 10 year bond. There's been a lot of buying of that, and that's kind of pushed it well above 1%, which is something we hadn't seen much of.
Yeah, didn't it get up to I was thinking 1.9. Did it get up that high?
It almost broke 2.
That sounds like so little, right? We're our new website, which we're going to roll out next Monday, by the way.
Very exciting.
And we will let you know. But it talks a lot about, I forget. People try to live off of 2%.
Sure.
And yet it sounds like this great deal. How come?
Well, if you look at the last, more than 10 years now, almost 13 years, interest rates have essentially been zero or close to it. They've been artificially depressed by the Fed. And the Fed is really at a vested interest to keep interest rates low, to keep the economy going. We had the recession, obviously, in 2008,
right,
and everything that's happened with COVID.
So every time they start to think about raising rates,
something happens.
Sounds like my life.
And Dennis and I talk about this that the market, the market is kind of like a drunk person. They can't give it up. That interest rates have been so low for so long that even the slightest hint of a rise, like it approaching 2%, is enough to really kind of spook the market. You see
spook the stock market.
The stock market, correct?
Right.
Yes.
Yeah, okay.
You see particular areas like utilities, which are interest rate sensitive. They function kind of like a bond. Those have done very poorly, but not just them. Even things like consumer discretionary or spending in general, which
right,
kind of brings us to our next point.
Right.
Amazon.
But just to stop on interest rates just for a little bit, I think the piece that everybody misses, we think of interest rates, we think of how much are we going to have to pay on a mortgage or a car payment. Or you're the other way around thinking, how much am I going to get on my CD or my money market account? So we're looking at them differently. One group wants them to stay low, the other group wants them to be high. And I always try to remember people that high is not always more, which is an interesting concept. Because back in the late 80s, I think, late 70s, early 80s, the Treasury was, I believe, 13%, the 30-year Treasury bond, the 30-year bond. And that sounded so cool, right? If we'd all been smart, then we bought 30-year bonds. We'd been happy because I believe they're not callable. However, the inflation rate was higher. The inflation rate, I believe, was 14.5. Now, I might be off just a little bit, so if you're all fact checking, I might be off just a little. But the point was, Inflation was higher than what you were getting at a very seemingly high interest
So
rate.
you were essentially losing money even in a riskless investment.
So then when interest rates dropped down to like 6, everybody was freaking out, but inflation was only 3. So in this case, you were 3 points ahead of inflation. So 6 was actually more than 13. So in this case, less was more.
And very safe being a treasury.
Right. So I mean, I'm trying to give it some perspective here. And
No,
now we're
absolutely.
artificially low. And the key thing is the government has a lot of treasuries out there to other countries. All right, we borrow from them.
Tremendous amount of money.
And so our rate is very important because if we have to pay 6 or 7%, that might put the whole country, in more trouble, right?
Right.
And they won't. Everybody will want our bonds.
Loans could be called,
But can
so
we
on
pay
and so
them?
forth. Yeah.
Right. So there's this whole thing going on about what is Europe going to do, what is Japan going to do, with the interest rates coming up a little bit. Is that going to mean they're going to run to the United States, get United States dollars, push our dollar up?
Which makes people worry about inflation.
Right.
That's
So it's this big cycle.
It really is. And talk about the consumer discretionary like Amazon. Now, you would think,
Yeah.
that would be kind of resistant to interest rates. Someone going out and buying a washing
Right.
machine or dog food off the internet wouldn't be affected. But like we just mentioned, people buying our money, the dollar going up, inflation can directly affect, obviously, things like Amazon. If your dollar goes a little less further than it did before, you're more in trouble, which is something obviously we've seen throughout history.
Yeah.
When a country gets into really, really big problems, it's usually because of inflation. You're seeing a lot of that in like Venezuela right now. Or I watched a video over the weekend where they interviewed this gentleman, and they're like, "Sir, how much money do you make?" And he's like, "I make 40,000 of whatever the local currency was a month." And they're like, "Okay."
A month. Okay.
So they're like, "Okay, well that's about $9 US with conversion."
Wow.
Not a lot of money, but different things, different part of the
Sure,
world. Our
sure.
dollar goes further. And they're like, "Well, how is inflation affecting you?" And he's like, "Well, come with me." So they walk across the street, and he goes to a local hot dog stand, and points to a price. You can't see it because it's in whatever the local currency is, but he's like, "That's approximately $1 US for a hot dog." Guy makes $9 a month. So that's kind of what people worry about when inflation. It's never obviously gotten that bad in the United States, but people see things begin to spiral and it spooks the market. So that's really where the volatility came from these last few weeks.
And we could talk more and more about how the higher interest rates and what it does to the price of goods and how these things sort of level out. Although that's a really long discussion.
Yes, and a complex one.
Right. So Amazon, but the word on Amazon really right now is that it's actually a good buy.
Yes, and the reason I would say for that personally is because while everyone sees Amazon as this vast internet online marketplace, they make a lot of money selling you your dog food, and me my cat food, or Tupperware, but the vast majority of their money is made through Amazon Web Services.
Web services.
So they host the vast majority of websites, about 40% of the internet is hosted through Amazon Web Services.
I don't think most people know that. I didn't know that.
No, it's not a well-known fact. If you go to say you go to www.nasa.org, okay? The NASA website run by the government is hosted by Amazon Web Services.
Wow.
So if Amazon Web Services were ever to go down or get into a dispute or so on and so forth, they control a very large portion of the internet. And it's something like 70% of Amazon's revenue.
Wow. I really had no idea. So do we own Amazon?
Oh, absolutely.
Right, in both our growth portfolios and our double income portfolios?
We do. It's an important portion of any portfolio these days, I believe.
Okay. So we have some Amazon, folks, and if it's a good buy, maybe we'll have some more. Do we have 2.5% or 5%? Do you know?
We have 2.5%. We're always looking for more opportunities. Honestly, Amazon's been, I like the word anemic this year. It's been very slow. So there really might be a good opportunity before it breaks out
Maybe
again.
we'll get a little bit more. Like I always tell everybody, I bought Amazon at 14, and at that time it made no money, and all it did was sell books.
Where's your mansion, Don?
I know. Where's my mansion? Where is my crystal ball? Well, we don't make those mistakes anymore. When we're younger, we do things differently. That's one thing the Van Winkle's all about. We're not going to talk about that right now because we're probably out of time. But maybe next week.
Yeah, we'll do a little
talk
presentation
about
on
that and how really I could have done so much better on just a simple 100, 200, I think I had 200 shares. That's all I had.
That long term.
If I had that long-term view, right? Okay. Well, anyway, this is the Naples Money Managers saying to you, money matters, but most of all, most importantly, you have to know this, you matter. Talk to
Thank
you next
you.
week.